Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly here. Had a little bit of a hiccup again with the VIP link. I don't know what the heck's going on with that thing this morning in the mornings, but I'll have to do some digging and figure out what's going on. But I think we're all good now. Should be ready to rock and roll. Anyway. Get that over there. Get that out of the way. There we go. All right. Good morning, good morning. Welcome, welcome. Mic check? Yeah, it looks like everything's going. Good. How's it going, SSFTG family? I hope you all have had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to go through and understand everything that is inside there. Just a quick note for you all as well before we jump on the YouTube side, if you're watching on that end of things. The stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, I also want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education and career. One of the easiest ways to start out is to join as a member on YouTube, and that gets you in the chat room and a bit more behind the scenes and what's going on. Or if you want more information on how we do everything in our trading approach with over 19 hours of video course material and all kinds of really cool perks, you can swing over to the main page at SSFTG to get more info. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. Glad to have you trading alongside of me today, analyzing these crazy markets of ours, rolling into a Wednesday. Let's take a look at some news. Take a look at some charts, see what all is going on for today. As far as the news calendar is concerned, we really don't, I mean, we've got a few things, but, well, hang on now, before we jump ahead of ourselves. Don't forget to grab your morning DP levels. Those are posted for you this morning in the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. How would I even give emphasis to another one? NASDAQ, S&P, Gold, Crude, Euro, Bitcoin. It's got to be the last one. Oh, whatever. It's a race every time. As far as the news is concerned, we did have 815 ADP non-farm. That's not the big non-farm, not to be confused with the actual NFP reports, but it does definitely move things around. As far as other news announcements for today, 10 o'clock, ISM manufacturing PMIs forecasted at 58.6. And then, of course, today's Wednesday, so we have the crude oil inventories. The forecast is negative 3.088. And if we look at the API, which I have posted down here for you, that came out at negative 4. So, right in line. Basically, I mean, it was an extra million over, which, you know, it's nothing to shake a stick at, but it's even more bullish than they were anticipating. And the API is telling us to expect a bullish response. So, going into today, crude oil has kind of a bullish tilt to it a little bit, just kind of behind the scenes. We'll see what the charts tell us. As I look over and crude oil's tanking. Yep, it's perfect. Let's start off on the S&P first, see what's going on. We've got more continuation to the upside. It just keeps going. This thing's an Energizer rabbit. It's just unbelievable amount of bullishness to the upside. And, I mean, every time the bulls kick in, there's just no pullback. It's constant, persistent bullishness over and over and over and over again, basically straight up. Now, if we're looking at it from a volume perspective, we've been talking about this for a while where, you know, the volume had kind of built up. We had the POC. We broke above the POC. We're rattling higher. Here's something that really stands out as an incredibly abrupt chunk of volume, though, is this guy right there. You see that volume node? Now, the market didn't exactly spend a whole lot of time there, but it traded an incredible amount of volume there. Like, if you look at the POC volume, that was here. That one level was right there. It missed it by, what, like 10% maybe? Not even. A huge amount of volume that was trading around the 45.20s. Now, I don't know if that was shorts who were still stuck from the 44.83s trying to get out. There's not enough of a move to really suggest that there was a break even. So, I mean, maybe we're still waiting for another push to the downside. But, man, that 45.20 is no joke. There's some monster volume coming in there. From an overall structure perspective, I mean, maybe... Ooh, that didn't work. Let's try that again. Top of the wedge doesn't really fit. Doesn't really do anything there. That one kind of worked, but then broke above. Maybe this one, I guess, you know, but here, what does that give us? Like a channel, kind of? I mean, it's miles away from it. Maybe we've got a midline. It fits, you know, that's about all we're working with right now, is we're kind of hanging out in the middle of limbo, and things just kind of fit. It's not the best in the world, but we'll see if they can get a little more refinement to this. As far as the overall cycling is concerned, from the... Okay, the snapping's driving me freaking crazy. Why is it snapping? It's on... That was weird. Going from the low, we have the initial rotation off of an L3, and that L3 is usually going to see an L1. Now, we didn't actually get an L1 for ages until they finally got the pullback on the 26th. They didn't have an L1 pullback for about a week. It just went straight, literally straight up. When they finally did pull back, they got the L1, and since then, the market hasn't stopped going higher. The last pullback that we had almost made it to an L1. But so far, this entire rally up since the 19th of August, we've only had one L1 pullback. That's it. So, I mean, there's a heck of a lot of bullishness going on here. Over on the gold market, speaking of bullishness, also grinding its way up. I mean, it's not the prettiest of things in the world, that's for sure, but it did do the one thing that we were looking at. We got to zoom out to a 60-minute chart just to see it now, so it's so detached. But we were trying to get this rotation to the downside, and the sellers eventually meandered their way down. Huge collapse under the low. A lot of bulls are going to be waiting for the sellers to fail, rotate back above, and they're going to want to buy that pullback. But here's the thing, it's not pulling back. It's not getting back to that area of interest back in the, 50s, 60s, 55s even, just meet it in the middle. It's not making it back there. So we've got this perpetual higher low trend going on, and it's starting to look like the NASDAQ, where bulls are like, wait a minute, gold at 1780? Like, for real? Okay, I think we've got a lot more than just short-term buyers stacking up in here. We've got some bigger picture traders who are also building into their portfolios. When markets dip like this, especially on physicals with the commodities like that, in the sense that you could go and buy gold coins, a lot of people go out and start hoarding the physical product. And, well, we've already seen that happen in COVID. But over on crude oil is beginning to pull back a little bit, looking at the breakaway POC that they left behind up to the top. We've got that back at 67.60, but it looks like my data's bugged. Okay, so it's still 67.60. In order for the sellers to achieve anything, we know that they have to break underneath 67.60. Plain and simple. The sellers cannot control this move until they get below the dominating volume. It's just the way that it works. Now, if we progress this a little bit further forward, obviously they've been given enough time. Maybe they've shifted the POC. Okay, they have. So from that perspective, 68.75, all they've really done is built into a kind of an average ahead of the breakout, but the breakout point hasn't happened yet. They're trying. It's looking really good. But remember the overall perspective. We know that the inventories are kind of anticipated to be bullish. And if we look at the last time that the market really started rallying away, this big breakaway, the true impulse before it actually had any sideways action, that left behind a POC back at 65.58. So, I mean, that's a little bit of a concern. I would really not like to see the market pull down that far if you're trying to buy up here. So that gives us a really big concept here. If we're going to be buying on this dip, we shouldn't really risk a whole lot because it doesn't favor that. It's a wide open cliff down here if it wants to break down. Now, it might be better off because of that to wait for a more opportune location. But realistically, looking at the way that this is moving, we have a perpetual bull trend to the upside, and it keeps going. None of these have broken previous major lows, and that's kind of what I'm looking at. Like, well, wait a minute, that's a really nice spot. Buyers will be able to buy here with stops under here, targets all the way back up to the highs. And it fits. So definitely reason for crude and the buyers looking at the inventories to kind of propel this further up. Could be looking to utilize that. Over on the euro, euro's continuing higher. We're breaking back up, and the market continues to make a, well, I guess now we've got a nice little channel working its way up. The market broke above the channel high, and my concern here is that we're going to test the inside of the channel. They break above, overshoot, pull in, test the inside, and fail down. The nice thing for the bulls is if that does happen in a fail down, that'd be basically just right back to the bottom of support. So not really much of a change for the buyers at 1.18. The overall cyclical nature going from the bottom all the way up to the top. Their impulse is back. No, that data's bugged. Hang on. Okay, still back there, 17,570. So if the sellers are going to take over anything, they either need to make a new high to further this impulse, or they've got to break below 17,570. So well, we're a little ways away from that. It looks like the bulls might actually still have some pretty good arguments here. Looking on the Bitcoin side of things, still sideways, chopping around, not really doing much of anything. In the bigger picture, we still haven't broken any major swing lows. We are starting to churn underneath this low, but this is not a confirmed low. The last confirmed low we had was back here. Of course, it does depend on the scale that you're looking at, of course. But, you know, as it stands, it's not really it. So we're just kind of sideways still. Ethereum, nice continuation, break back above the highs, breaking back above 3,500, showing some good continuation. Looking like the bulls want to keep this going. So, I mean, they've got a shot. It's got some really nice continuation. You've got some higher lows. The rotation off of the base, well, initially we did have a higher low reversal off of L5, and L5 is usually going to see L2. They dipped all the way down to a 3. Disappointing. When they made it back up to the highs, with that disappointing pullback, that ended up being the top for a while and the pullback much more aggressively. That's not a surprise. That's what happens after disappointment. They go back to an L4. After an L4 sustains, holds, and breaks, we're looking for an L1. We hold the L1 to the tick, basically, at around 33.63, and it's gone up since then. So from a cycle structure perspective, it's working really well. It's working really, really well, actually. Nice and bullish. Looking over on the NASDAQ, and starting off on the daily chart here, seeing what's going on. From the daily perspective, again, breaking below the previous low of day. That would have been the zone of interest. Still arguably the zone of interest. I mean, it's kind of a bummer the way that it's moving around inside here, but the L1 hasn't technically changed, so below those lows is a nice zone. Doesn't exactly feel like a nice zone, gotta be honest, but the chart tells me it is, so sure, I'll go with it. Looking at it so far this on the 15-minute and kind of gauging where we're at, right? We can see what yesterday, even as vindictive and disgusting and train wreckish as yesterday was inside that range, it still allowed us a relatively obvious point where when we were breaking above that structured POC, you go back, and again, you're looking at the impulse. We have the impulse POC, which broke earlier. That was the first clue of the attempted rotation higher. If we continue this a little bit further and kind of gauge, okay, well, you know, where are these traders maybe coming in from the sell side, especially? If you're going from the bottom to where the top was, sellers have a POC down here. That's not going to help them a whole lot. They roll up to a new high. Now they've got a POC that's rotating higher. Maybe they make an attempt. They couldn't even break a new low. So now it doesn't really cover the bases. Let's see if they can get another new high. Right? They got another new high. Couldn't even get underneath the POC. I mean, that's what yesterday was. The entire day was just bouncing off that stupid POC all day. And now that we've finally broken through all of that resistance, the market's going to want to pull back to where? Well, guess when it did it, right? Of course, it did it at 5:30 in the frickin' morning. So there's not really much that we could do about it unless you're trading that early, but typical. That was the bounce. How's it going, Ace? There's that, who was it PD? Who was talking, I don't know if PD's in yet, was talking about the overnight trades. Pretty sure it was PD. There's that overnight move again. Bingo bango, they got the POC and it's gone. Ridiculous. Looking at what they've done so far today, I mean, realistically, in the grand scheme of things, we haven't really done much of anything. We started off here, right? The open was here. Rolled up to a new high. Tanked all the way down to a new low. Ripped all the way back up to a lower high. And now what? We've gone nowhere. If we're looking at the larger cyclical nature of things off of the base, because again, yesterday was incredibly sloppy. But when the overall reversal started taking place, we've got the churn off of the bottom, and it was a mess. L4 should see an L1, it got an L2. I'm like, okay, great. We broke another new high. We don't really know what's going on. Kind of disappointing. We've got to wait. Got an L3 pullback. L3 should see an L1. I mean, man, barely hung on to that thing. Barely hung on to that thing, and then rotated up to a new high. Okay, maybe they're starting to show something, right? We've got that first L1. We roll up to another L1. Awesome, we've got 2. Now we're looking for that textbook third follow-up move. They missed the third follow-up move by a fraction. Roll up to a double top, make a quick new high, and then tank all the way down to the 2. Right? So they missed the triple up L1, and immediately and viscerally reverse straight down to the L2 for the follow-through. So yesterday was an absolute mess in terms of the way that they got things done. They still got the job done, but man alive, what a mess. So now looking further, we've got this perpetual continuation where we've got the L2, we've got another L2, we're breaking higher again, maybe we get a third, they're holding the third, and we've rotated all the way back up to the highs. Again, very, very close to DQing it. So, I mean, realistically, this thing is just kind of skirting on the edge of acceptable, unacceptable type movement. It's definitely having a tough time here, that's for sure. There's not really any cycles going on. From the volume perspective, I guess we can just look at the impulses from top to bottom, but chances are just going to be in the middle because we're in a range. So... yeah, doesn't really prove a whole lot. And if we wrap this whole thing across, it's probably smack in the middle. A little top weighted. Yeah, usually spikes at 3 a.m., but... I mean, technically it did spike, well, tanked at 3 a.m. It still had an incredible move at 3. Just hope you're on the right side, you know. Given that we really don't have a whole lot to work with in the overall cyclical nature in this kind of sideways goings on, we could even narrow in a little bit more to the potential microcycle side. I'm just saying, you know, I mean, realistically, this is about all we have to work with right now. Microcycle up, break 2 legs to a new high. It's very straightforward, elementary stuff, but, I mean, when the market gives you lemons, you know... This one looks like it just went on and on and on and on, but, I mean, realistically, the original trend channel would have been inside here. Before going absolutely freaking crazy. Rotation back up, nice bull cycle, break, several legs to a new high. This one's a little bit spicy over here with that lower high. Usually you're looking for a channel off those first couple, which would have been here, but that... yeah, that didn't fit at all. It didn't fit there. Didn't fit there. I mean, maybe this? How disgusting is that? So, realistically, it's probably this one. And we've got a break and a leg down. So... I like that follow-up, Steven. Realistically, how often do you rely on those EMAs on your charts? I can't. I have crutch words sometimes. You know, it's what it is. What it is. The EMAs are more of, and that's what that is. Honestly, it is just a visual crutch for me. I rarely ever use the EMA for a trading decision, but when I take them completely off the chart, it shifts my thinking. When I have a completely naked chart like this, my thinking is totally different. It's the way that I've sort of hardwired myself, I guess. But when I have a totally naked chart, my brain immediately goes to structure. I'm looking for the arms and the bones and what makes up the skeleton of it, if you will. So when I take the moving averages off, that's kind of what creates that scenario. Hang on one second. So when I'm looking at moving averages, the moving averages are more just to ensure that if I zoom in or if I zoom way out, I'm staying generally on the right side of things. As far as moving averages work, the market doesn't go up unless it's above, right? So. Now, obviously, when the moving averages are just chopping back and forth and up and down and up and down, they feel useless, but they're really not. They're telling you that the market's going sideways, as if price action wasn't obvious enough, you know. But it's more of a visual crutch, if I'm 100% honest. I'm just so used to seeing moving averages there, and I've trained myself to the point where if the moving averages are off, my brain looks at the market differently. It's just a different thing. That's why I keep them in 2 separate tabs. Yeah, exactly. Looking at the S&P and where we're at so far, if we look back at first off the 5-minute, yesterday's range, or whatever you want to call that thing, we're kind of topping out at the highs, and we're actually opening up. We've got 6 minutes, but we're hovering right around that settlement that they couldn't fill yesterday. And we're right up on top of these previous zones of resistance or maybe support. It's going to be a really awkward open if it opens up here. I mean, looking at the pre-market, it hasn't done much here either, but I guess for lack of anything else. They're still following them, you know. They're trying to break above. The impulse POC was left back at 15,641 though, so they're definitely fighting an uphill battle here. When you have a chance, how do you get your daily stocks or hot list for the day? Sure. Or actually, hang on. Are you in the room right now? How do you display the price on both the ETH and RTH at the same time? Mine only shows the close of the price on RTH in the 5-minute, not the current. Oh, so no, that isn't actually my crosshair. That is one of the indicators. That is the current price line? Current price? Price line, that's what it is. It basically plots a line on the current price that you can still see while the market's closed, or, well, but hopefully you can hear the air quotes closed when we're out of session, right? So I can still see where the market's moving, right? It's up there at 45.30. And that's why I like it. That price line indicator is really useful to see that kind of stuff. If you don't have a price line indicator, they have a few different variations on Futures.io, Ninja forums. They're out there. Of course, it's also in the indicators and all that fun stuff. But it just makes it easier to see where it's at. Okay, so where do you get your morning list for stocks was the question. So the morning list, first thing, if you go to... hang on one second. So if you look at FinViz TradingView, and you go to the top stock gainers, if you're not sure what that link is, it's right here, tradingview.com/markets/stocks-USA. Geez, that's a horrendous link. I'm just going to paste that in chat for you. Golly. that's one of them that will show you what's going on so far. So as an example, ACST, I can go over to TradingView and I can look at ACST on a 1 minute, make sure that we've got the extended session on. So this is where you can go for some of the market movers. Now, you'll notice if I look at ACST and I go back over here, there's some pre-market movement, but you'll notice down here there's an S. That's because it's a split. So immediately that's off the table. Like, I don't really care about that one. Totally irrelevant. But this is going to be one of them where you can find them relatively quickly in terms of halfway decent stocks. Another one is Market Chameleon. Let me see if I can find that one. Market Chameleon. I don't even know how to spell chameleon. Jeez, oh, Pete's. Market Chameleon. Morning Movers, I think is what it's called. Pre-market. There it is. Market Chameleon is another one, and this one does update pre-market stuff. So this one's really, really useful if you're looking for like more on the penny stock side of things, but they do have some names that pop up in this list. So as an example, if we look over here, SKLZ, that one's up 13.8%. So if we go to TradingView and we look at SKLZ, we've got 1 minute, so I'll make it quick. We go into the pre-market, and now I can see we've got a really nice pre-market mover. That's not too bad. So if you're looking for pre-market movers that, you know, are on more of the penny side of things, the Market Chameleon one is really, really good. It gets you some pretty nice stocks. If you're looking for bigger names or companies that you're going to be investing in a little bit longer term that happen to be more on the cheap, then TradingView is going to be a better alternative, but it's going to be slower. You got to wait until things open up, unless you have a membership, of course. Yeah, no problem. All right, market opening up. We're not really opening up anywhere special. The S&P is going to be opening with a slight outside gap up. Awesome. Yep. Yeah, it's a super useful indicator. Bullish continuation, attempting to break above that 15,641 driving POC from earlier. Also, the S&P settlement price is filled. They got that test. NASDAQ is still looking for that rollback to the upside. The 0.38 fib is back to the top. That is a very nice bull bar to try to get things going. I do have some concerns as far as the larger top-weighted POC, but if we go back across this, well, they're still having trouble. It's very rangy, and right now, if you're trying to buy, you're buying as a trend continuation trader. Higher low continuation, right? So very nice bull bar. Are you serious? Okay, I didn't even get a fill. I tried buying into that bull bar. Couldn't get it. Awesome. Well, that wasn't nice. Jeez. Mildly frustrating. So I don't know if anybody was able to move fast enough to grab that one, but the idea was waiting for enough proof. Yeah, we had a nice bull bar here, and that's great, and I'm sure buyers picked that up, but we're still in an overall sideways range in the bigger picture. We've got to have something. It gave the proof. It didn't give me time to get in, though. That does also mean that from an impulse perspective, this has now gone up to a new high. That's left behind at 15,628. So far, it's only an L2 after breaking the new high. If we're looking for the short side to see, they did actually have some opportunities. So bulls are going to be looking for an L1 continuation on a full flip back to the upside. But mitigating some of the risk on the smaller side because of the fact that we could still get that dip back to the L2. Or it's just going to go up without me and not Phil. Cool. Jeez, okay. Kind of curious. The S&P is just not doing a thing. All right. Well, the first volume cluster on the S&P at least, now that we are holding the gap and trying to churn higher. 2850 for now. And even on the narrower perspective from the low over here, we have an L4 rotation. That one is holding L1s. And that L2 fits pretty nicely with the larger L1. So everything stacks up just a little bit further down. Maybe towards the base of this L1 around like the 648s. 15628 POC is still left behind. 15-minute is pushing higher and almost at all-time highs after the reversal this morning. Wow. Well, they got the L1. Job done. 45.28.5 is the POC for the S&P. And 15.660 is the POC on the NASDAQ. Natural zone of interest is going to be more down towards like the 650s. From a risk perspective, that does fit a 3-to-1. Down here is more likely going to be... That actually only fits a scalp, huh? Gotta back these off a little bit then. There we go. Probability of success in terms of likelihood, we're going for a 2-to-1, closer to 38, 39%. Not very likely, but still definitively worth the risk. Only one, huh? Okay. 660 is the 5-minute POC. Got the volume cluster hanging out at 57. The 2-to-1 objective is up at the highs at 666.25. Bulls are still attempting to maintain support above the 15,654 area. As far as that being their POC to the upside, 3-to-1 targets are actually above my 2-to-1, so I'm still okay with that. Market's trying to get above that POC area again, 57.50. They hit the inside of that? No, they didn't. Okay. We still got time. I won't ever put a stop at break even. Putting a stop at break even is one of the easiest ways to get tapped out of a fantastic trade. If I were looking to mitigate my risk by going to break even, I would rather take an additional contract, scalp out of that contract, and offset my stop by that distance. I despise break even stops. For what just happened there. Side note. How many people do you think put their stops at break even? Just to miss a 30-tick bounce. I'm not trading it that way, but I love how the example showed up right as we were talking about it. That worked out beautifully. Double bottom off the support zone. Yeah, it's a pip stop. They pick your pocket. S&P is still churning down a little bit, but the Nasdaq's catching a little bit of a lift. $660s, trying to get the break above. They're holding above the POC. Three-to-one objective is through the high, which is why I'm opting for the 2-to-1. But in that area. POC shifting up into the 660s. $660s causing a lot of trouble around this 5-minute POC starting point. I've only been given one of the contracts. Bear trigger in underneath the POC. Get back up there. POC shifting back to the 60s. POC shifting back down. They're jerking this area around a little bit. I'm going to jump ship on this pop higher and accept the fact that I was only able to get one contract. And I'll take it at the 1.5. There's too much resistance here. Here's the thing and why I'm okay taking the target here. Normally, I don't like exiting early. But had I had multiple contracts, I only got the one. I was trying to buy 3. I'd be exiting one here anyway. So if that wasn't the case, different story. But I'm not about to let it pull back against me and turn a perfect fill into a losing trade. That's not going to happen. I wish they would have given me more contracts. But, oh well. But a fantastic example of why I do not move my stops to break even. If I were looking to modify as a break even, as an example on this dip lower, like we were talking about, I would rather buy in instead of, well, granted I was only given the 1, but let's say as an example you were given 2. On this initial rally, you scalp out of that first target, right? And then you take this distance and you measure it down and say, okay, that's where my stop is now. I don't want to risk way down here anymore or wherever it was. I'm only willing to risk this because effectively it's still break even, but you're giving the market more wiggle room. You're increasing your probability. When you win and you get a 2 to 1 finalized trade, then it's a 2.5 to 1. When you lose, then it's, you know, it's your full loss. There's there are risks, obviously, but. Continuing up to the highs, the upside objective for the NASDAQ is, well, I mean, we're at all-time highs, but the 0.38 from the Elliott wave was at 677, which I think just hit. Yeah, they went up to 82. Back to all-time highs, hitting some major targets up here. Look at the POC on the S&P. They still haven't closed underneath it. Sheesh. A higher low reversal off the base? Wow. Probably one of the most obvious spike in channels in existence. S&P. It's interesting. Yeah, I'm just gonna have to with you know, with the micro NASDAQ, I'm starting to think I might just have to use the market button. It was I know originally using the market is just like, why would I ever do that? But man, I get no-filled so frequently on the micro. I mean, I get no-filled a lot on the NASDAQ too, and I get no-filled a lot in general. But man alive, he says with, you know, after that last, but. You know, that's 1 out of how many times have I been missed? We've got more continuation to the upside, looking at it from a cyclical perspective further out now that we've got a bit more juice in the move. We've got the L2, which is almost an L3, rotated up into another high. We've got an L1. They're climbing the ladder. We've got an L2 into an L1. We either continue an L1 or they stop even getting back to an L1 and this stays perpetually bullish for the rest of the morning. Or we see this revert back and slide down the ladder a little bit, diving down underneath the deepest one in the sequence, which would be an L2. So you'd be expecting them to dip to an L3 if it does. So we either just slam the gas pedal to the floor and keep going, or we get a halfway decent, healthy pullback. For the 5-minute chart in the ES, you only look at settlement. Does the high and low of the previous day concern you in any way? Well, you'll notice I do have 2 different charts. I've got the 2 different tabs. So I can look at the 2000 tick and see where all of yesterday happened. Or if I want to just look at the RTH, which I do put a lot more emphasis on, then I've got this chart here too. I like to have access to all of the variables, even if I don't necessarily look at them very frequently. Today, I've looked at the ETH a lot more frequently because it's a very awkward open. That's why you've seen the 2000 tick so much today. In fact, because it is very awkward. I'm trying to figure out what this thing wants to do, but we've got like a V bottom, V top, dump, sideways consolidation, V top, V bottom. Like, what in the world? So you got to zoom into the 2000 tick and see what's going on behind the scenes. You just don't get that info from here, you know. At least not always. Baby, that's a... Sorry, 2 seconds. Okay, there we go. We've got more continuation to the upside. Market did break above that previous POC, and we're starting to rally into these all-time highs. Jumbotron breakaway move again. S&P bull continues into a new high above the POC, which is great, but then down gaps to the next candle's open. Let's see if I can get a backfill off of 28 quarter. I would actually even see if I can get 27 half. I like that more. We've got a range. It should be able to pull back further. And look, holy crap, look how far away 1 point is. What? Yikes. 2750 to 2850 feels like a mile and a half. 100% honest, I'm not interested in trading the S&P. It's got to get more volatile. I can't. With a 1 point distance being that big, that's ridiculous. I'll go where the volatility is. Pre-market movers, just as a side note, we were talking about these this morning. SKLZ is starting to pull back off of the top. And I'm kind of curious. Where the heck is my order flow tool? Oh, they made it look different. That's stupid. Okay. Sure, whatever. POC's up at the top. But that's not going to work. Never mind. I thought the POC was below. Ooh, now hang on. Here's another one. ABVC, Alpha Bravo Victor Charlie, another POC up at the top. All these pump and dumps this morning are, ooh, they're looking like they might get a little spicy here. Unless they can get above those POCs. We'll be in a lot better place if they can. Market's still just kind of continuing to the upside. Not really getting a whole lot of anything going on anymore. Slowing down a bit. Hey, how's it going? Welcome, welcome. We got about 6 minutes until the open. Or, I'm sorry, until the end of the morning session. So feel free to get those questions in, and then we'll transition over into the extended session. But honestly, looking at the way that this is moving, I feel like moving into the extended session, we're not going to have anything to talk about. There's not really going to be likely any trade setups unless we start moving on the more aggressive side. I mean, realistically, I think it might just be more beneficial to keep the morning session going this time around, and I just don't know if we're going to have anything else. Would have got the 1 point on the S&P? Yeah, that's fine. Right. Oh, and yeah, there's just nothing much going on. Oh crap! Hang on a second. Is that today? Sure is. Okay. So actually, we're going to just keep the morning session going for a little bit longer, and I'm gonna have to close up shop just a little early. I've got a few things that I've got to take care of this morning. I almost forgot about. Thank you, alarm clock. So let's get those questions in. I wasn't intending on closing up shop this fast, but I almost forgot. I've got something I got to take care of. So let's get the questions in. We'll move into 10 or a little bit after, and then we'll call it a day. Trying to get myself in trouble here. Look at the big red candle on the ES. I know, right? What is it, like 4 points now? 29.75 to 23. Ooh, 5. Ooh, watch out now. Big flush to the downside. Rallying back to the POC at 660. I wish we didn't just cycle off all-time highs. This would be a zone where buyers are buying for a continuation up. Incredibly low probability, but that's because the trade structure looks like this. All right, the risk is super tiny for a reward that's like 7-1. Not very likely that the trade's going to work out, but there are longs here that are picking this up. Yeah, the ISM report around the corner at 10 as well. We've got news at 10. There's also inventories at 10:30. So, again, I've got a couple things that I got to take care of yet this morning, so let's get those questions in. We'll move into training time, and then we'll call it a day. Only the one trade, and got jumbled up around the first 5 POC, which is where my initial target was, had I gotten multiple contracts. Decided to exit because I only got the one, and really wished I got multiple, but oh well. So far for the week, it's definitely been a challenging week. Yeah, it really has. I've had a lot of trades. Monday was no trades. Tuesday was a ton of trades. So today I was trying to find a balance in between, and then this happened. I mean, unless we had one, I've got a lot of trades this week for sure. But that's because of the way that it's all been sort of working out. The averages for the week, though, 105 trades, 56.19% accurate. Average winner 23, average loser 22. So a little over 1-to-1, all things after the dust is settled. Favorable, positive math, which is nice, but it hasn't been a week to get any massive runners, that's for sure. Or it has, but it's done it without me having any more contracts left. All right, we're going on to 10 o'clock. Like I said, I don't mean to duck out so quickly, but I've got to take care of a couple things here before we start heading into the afternoon. So I didn't see any other questions come in when we started going into training time, but if there were questions that you're still typing out or anything like that, feel free to send those to me via email. I'll get those covered for you from there. Yeah, Labor Day is right around the corner as well. So, I mean, we're just going to have to play it by ear, I guess. We'll keep going with it. Enjoy the rest of the day, though. If I miss any questions, you can always shoot me an email, jhb@ssftg.com. You can also drop them in the comments below. I'll get them from there. But hopefully you had a great morning, and we will see you all tomorrow morning, all right? Have a good one. We'll talk to y'all later. Thanks. Bye.